13% on a year-on-year basis. Their exports contracted too. The company said the shortage of electronic components had a minor impact on production. My colleague Parishit Luthra caught up with Shashank Srivastava, Senior Executive Director of Marketing and Sales at Maruti Suzuki India, and began by asking him about the sales performance in November, the production outlook and the price trends.
November was, I think, a good month in the sense that we saw almost on all the demand parameters, good stability. The total wholesale in the industry it ended with 322,860 vehicles against 245,600 of last year. So that's a growth of 31.5% for the industry. That's pretty good. The retail estimate, though, are a little lower than the wholesale number. It's about 285,000 in the industry, 286,000 against the wholesale of 323,000. So the wholesale numbers are the highest ever November, actually. And this is the 6th consecutive month where we have seen the industry wholesale numbers more than 300,000. And an interesting point is that if you take 2.9 lakh, that 290,000 as the cutoff, then it is the 11th straight month where we have crossed that 2.9 lakh number. So it seems to be as if the industry has recovered to the beyond the pre-COVID levels.
Right. So you're saying that industry has recovered beyond pre-COVID levels. But just to ask you about Maruti Suzuki, in the statement from the company, you said that the shortage of electronic components had a minor impact on production, mainly in domestic models. Give us a sense of which were the segments, which were the models that were impacted, and to what extent?
Yeah, so the segments which were impacted to a large extent were the Ertiga, the XL6, which is the MPV category, the Brezza and the Vitara, the Grand Vitara, which is in the SUV category, and also to some extent in the Swift and Baleno, which are in the premium hatch category. So these have been the models which have been affected to some extent by the non-availability of the semiconductor components. And of course, there were other models where we saw good recovery, especially in the WagonR, Celerio, Ignis, Alto, Espresso segment, where we could have production back to the normal levels.
Right. What would be the current production shortfall?
So if you look at our pending bookings, they are around 375,000 at the moment. So obviously, and the bookings are largely in these models which I just mentioned. Obviously, our first target is to increase production of these models so that not only can we increase our volumes, but also help the consumers, more importantly, to have a lower waiting period. They've been waiting for quite some time in these models, and hopefully we can lower the waiting periods.
Right. I'd also like to ask you about pricing and pressure of regulatory costs. OBD2 norms, onboard diagnostic norms, are likely to come into effect from April 2023. To what extent will this add to the cost of the vehicle?
Yeah, so regulatory stringency obviously adds to the cost. We have seen that when we had the conversion from BS4 to BS6, and some segments getting more affected because of the higher elasticity of demand for some segments, especially the lower end of the market. The exact cost increase obviously varies from model to model, and also from fuel type to thing. So the effect of the RD norms, which will come in April, will probably be felt larger in the diesel vehicles, although there would be some impact on petrol vehicles as well. And we are evaluating model by model what could be the increase. And of course, we have taken corrective action already for some of the models. So in that sense, it's already built in. But regarding the pressure on the prices, yes, while the commodity prices have sort of softened in the last few months, but they are relatively high compared with what they were 2 years back. And in fact, in some commodities haven't really come down, including plastics, for example. Steel has come down, but still at a very high level, 68 rupees against 40 rupees 2 years back. So not all of those increases have been passed on the form of prices. So we are evaluating on these two fronts, both because of inflationary pressures and also because of material cost changes over the last couple of years, which may not have been passed on to the consumers. We will take a decision shortly regarding the pricing going forward.
All right, that is the Maruti management saying that they are looking to raise production for a few of their models. On the commodity prices, they say that they're still at elevated levels and they've not passed on all of the prices yet to customers, but they are going to take some decision on that front very soon. With that, we're going to...
Markets have taken a turn for the worst, right? When we started the show, we were at 18,700, thereabout. And now it's 18,650, almost there.
Yeah.
So just in the last 10 minutes, there's been this gradual climb down.
Yeah, around 0.8% gone on the Nifty. You also have the Nifty Bank, which is seen losses sort of widen. So it's 250 points lower on the Nifty Bank. But the mid-cap index seems to be holding up.
Just watch Reliance, actually. That's the one which is weighing down on the Nifty right now. The intraday chart of Reliance is absolutely congruent with the intraday chart of the Nifty itself. There you have it, Reliance at the low point of trade. And it opened well because of the windfall tax benefits that came by. That seems to have been sold into, and as a result of which, that's taking the market lower.
Okay, with that, we're going to get into our short break. We'll come back with more on the markets.